Friends, I welcome you all to our today's session. And today's topic is salaries. So, as you are aware of, under income tax law, there are five heads of income. Hope all of you will be able to recall that what we have learned earlier. Can you recall what are these five heads of income? Can anyone recall?
So, salaries, income from house property, profit from business or profession, capital,
There are gains of business or profession. Then
capital gains, and income from other sources.
income from other sources. So these are the five heads of income. And you also know heads are different, sources of income are different. Under each head, there might be multiple sources. For example, one may receive salary from two sources. One may earn profit and gains of business or profession under five sources. So there might be many sources, but heads are these five. So this is the first head, which is called as salaries. So if you look at Income Tax Act, there are in fact three sections, that is section 15, 16, and 17. These three sections deals with this head of income, salaries. So even if it appears that there are only these three sections, and if you look at this act, also very small sections, but you'll find this chapter, what we are going to discuss under the head salaries, you'll find it is a quite long chapter, big chapter. Only three sections, but big chapter. Why it is so? Because along with these sections, you have to read certain rules of income tax, and in addition to that, certain provisions of section 10. You know what is section 10? Section 10 deals with income which do not form a part of total income, right? So that means many times we call it as exempted income. So since salary has got some components like some allowances, some work days, there might be many components which are exempted, or maybe exempted fully, or maybe exempted part. So therefore, when we are reading salary chapter, we have to read it along with relevant rules and along with certain provisions of section 10. So that's why this chapter is a big chapter. Okay, so let me share the screen with you. And in the meantime, before sharing the screen also, let me first take you to the income tax department website. So to give you some brief idea that how salary chapter looks, how these sections looks like. Just give me 1 second for that. Yes. Are you able to see now?
Yes, sir.
Yes, sir.
This is the income tax department's home page. And I told you as of for today's session, there are three sections which are relevant for us. What are these sections?
15, 16, 17.
15, 16, and 17. Okay. 15, 16, and 17. Now you look at here. So I am going to show you Income Tax Act. So let me click here, Acts. Income Tax Act is here. Income Tax Act 1961. Just have a look at these sections. Let me first take you. You see, section wise, you can find it out. Let me take you to section 15. Yeah, section 15 I typed here. If I click here, search, you see section 15. Can you find out the title of the section? Salaries. The name of the head is salaries. So let me show you the content of section 15. You can see, right? Are you able to see it?
Yes, sir.
Now you see. So such a simple section, only small section you see. It says the following income shall be chargeable to income tax under the head salaries. So 1, 2, 3 items are there, two explanations are there. We'll be saying that this is how section 15 looks like. I will be also showing you section 16 now. Let me take you to section 16. Section 16, you see, talks about deductions. Are you seeing it? Deductions from salaries. As you know, when we compute income tax, there are certain deductions which are allowed under each head, under the heads of income. Like for example, there are certain deductions which are allowed under the head salaries. There will be certain deductions which are allowed under the head capital gain, like this. So, and there will be also some deductions which are allowed from gross total income. Deductions which are allowed from the gross total income, we had discussed earlier, they are called as Chapter 6A deductions, right? But these are different deductions. These deductions are allowed only from salaries. Okay, so if you click here, you can find out there are 3 deductions only which are allowed from salary. Let me click here. Are you able to see 1 or 1A, 2, and 3?
Yes, sir.
First one will be something called as standard deduction. Second one is about entertainment allowance. Third one is about professional tax. So we'll be going through these provisions. As you have seen, section 15 was a small section. Section 16 is also a small section. Is it not?
Yes, sir.
Here also you can find out 3 items only. Now from here, let me take you to section 17 also. Now you see, section 17 in fact defines what is salary, what is perquisite, and what is profit in lieu of salary. So 3 things are defined. So as you know, the name of the head is salaries, but here the definition is for salary, then perquisite, then profit in lieu of salary. You can find out list of items which are included under salary, perquisites, and profit in lieu of salary. Let me just show you. It is a little bigger, but not that big. Here you see it says salary includes 17.1, right? Section 17, subsection 1. You see these are the items which are included under salary. Are you able to see it?
Yes, sir.
8 items are included. Then section 17, subsection 2, if you see, perquisites include. You see perquisites, which we popularly called as perks. These perks include what are the things you see. These are the items, right? Then you can see 17.3 also. It's the list of perquisites you are seeing. Now you see 17.3. Okay, 17.3 is what? Can you read it?
Profits in lieu of salary include.
Profits in lieu of salary. So these items are also defined. So you had seen now section 15, section 16, section 17. So you must have understood these are only small sections. Is it not? But now let us go into the chapter. Let us see what are the things we need to learn. First, what we'll do, let us develop a preliminary understanding about some concepts which are relevant for salaries income. As our topic is that principles of taxation and law. So we'll see how tax laws can be interpreted. What are the principles that we need to follow? So to do that thing, let me share my PPT screen with you. Right, as you see from the heading that when you talk about the salary, definition of salary, you have already seen 3 items are included. That is, what is salary is defined in the 17.1, and perquisites are defined under 17.2, and profit in lieu of salary is defined in 17.3. You had already seen this thing, right? Okay.
Yes, sir.
And try to understand the name of the head is salaries. But what is salary? That salary that has been defined under 17.1. Now, friends, as we are discussing now, there are 5 heads of income. You can see it here. Salaries, income from house property, profit and gains of business profession, capital gains, and income from other sources. So when we are reading the provisions under these 5 heads, so we can classify them. So there are certain sections which are called as the charging sections. Charging section means under this section, or this section talks about what are the items which are chargeable to tax. Then under some heads, there are some deeming provisions. That means certain incomes will be deemed to be income. Deductions are also there. Deductions which are not allowed under certain heads, you can find out. And there might be some other provisions. For example, if you see the salary chapter, now three things are important. What is the charging section? Which one is the charging section? Can anyone tell me?
So I couldn't understand. But the charging section was it salary and other heads or only for
No,
salary?
you see,
What is
under
that?
salaries, I'm talking about. So salaries, if you're
15.
going to this head salaries, you have seen three sections, section 15, 16, and 17. And in that, section 15 is the charging section.
Yes.
Okay. And deductions are there in section 16. And other provisions under salary, you have seen section 17 defines three terms. Salaries, what is salary, what is perquisite, and what profits in lieu of salary that are defined under section 17. Right. So far as this head of income is concerned, you have to deal with these three sections. So one is charging section, second is deductions, third is definition of three items. Right, friends. Now, what I told you, you can also have a look at your arrangement of the sections. If you see, section 15 talks about salary due or salary paid or allowed, though not due, and arrears of salary. These are the three things which will be chargeable to tax. What is chargeable to tax? Salary due, salary paid or allowed, though not due. That means salary received, even if it is not due. Then arrears of salary. All these three things are chargeable to tax. That's why it is called as charging section. If you look at section 16, it talks about standard deduction, entertainment allowance, and professional taxes. These are the three deductions allowed from salaries head. And section 17, you have already seen, it defines the meaning. And it explains the meaning of salary, perquisites, and profit in lieu of salary. Okay, this is the basic foundation we have made. Now, before entering into the top, I feel it is necessary to explain you some concepts. So in fact, there are 8 concepts noted here for you. Let us discuss about all these 8 concepts first. In the discussion, we may come across some new concepts. Those things also we'll be discussing. First concept number 1. Can you read the title of this slide? What is written here? This is the first concept which is extremely important for us when you are computing income under the head salaries. What is the title of this slide?
Employer-employee relationship.
That is most important for us, friends. We have to see if we want that something is to be chargeable under the head salary, then we have to establish that there is an employer-employee relationship. Or as a lawyer, as an advocate, when you are arguing, so if you do not want to say that it is under salary, then first you have to prove that there is no employer-employee relationship. Okay. If employer-employee relationship is there, there is a possibility that it is salary. If there is a payment or there is something due from the employer to employee, money must be flowing from the payer to the receiver. Okay, payer to the paid. And between payer and paid, if there is employer-employee relationship, there is every possibility that it is salary. Okay, got the point? Understood this principle?
Yes, sir.
Now, if you read, every payment made by employer to his employee for services rendered would be chargeable to tax as salary. Employer may call it as anything, but if there is employer-employee relationship and money is flowing from the employer to employee for the services rendered, then it is salary. Okay, and before an income can become chargeable under the head salary, it is vital that there should exist between the payer and paid the relationship of employer and employee. So you have to see, you can see in this picture, there should be employer-employee relationship. Who is payer and who is paid?
Sir, employer is the payer and employee is the paid.
Yes, that is important for us. Okay. Okay, and certain connected concepts you may also remember. So when I say payer and pay, employer and employee, you have to see employer-employee means the employer must be paying that money in the capacity of an employer. Okay. Suppose employer has taken a house, taken a rented house. The employer has taken a house of the employee on rent. If in this is the situation. Now, incidentally, employer is paying rent to the employee. The question is it salary? It is a payment made by employer to employee. But this rent payment is not made by the employer in the capacity of an employer. He is paying it in the capacity of a tenant. So far as this payment is concerned, so one can definitely say there is no employer-employee relationship exists in this transaction. Therefore, it is not salary, it is rental.
Yes, sir.
Are you getting?
Yes, sir.
Yes. So that capacity is important. When I say employer-employee relationship, one thing you have to see that employer-employee relationship is that when payment is made, the employer must be paying it in the capacity of an employer, and employee must be receiving it also in the capacity of an employee. Okay, friends. So that's important for us. Now, concept number 2. Second concept, if you read it out, it talks about full-time or part-time employment. Friends, so far as this chapter is concerned, or salary income is concerned, there is no difference between full-time or part-time employment. Money received from part-time employment from the employer, it's also salary. Okay, salary doesn't mean that it has to be full-time employment. No, part-time employment for income are also salary. Therefore, it doesn't matter whether the employee is full-time employee or part-time employee. So there is a possibility some employee might be working with more than one employer. Maybe someone might be doing a job during daytime with one employer and at the night with another employer. Possible. In this case, both the incomes are salary. And for computation of income under the head salaries, what will happen? Income received from both the employers shall be clumped and will be charged to tax in the relevant previous year. Is it clear to you? Second concept is clear?
Yes, sir.
Concept number 3. As you can see the heading, here we are talking about foregoing of salary. Some employees may decide to forego their salary. Example, suppose someone is working in a entity and he decides that this month's salary I will not receive. Let me, you please donate it to some charitable organization. Right. What he's doing, he's foregoing his employees or he is waiving his salary. Friends, you will be learning, or at a basic level also you have understand that once salary accrues, it is taxable. If someone is foregoing it, then that is an application of income. When we are discussing the basic concepts, earlier you have understood when discussing the concept of income, at that time we are aware of that application of incomes are taxable. Diversions are not taxable. Have you remembered this concept? Earlier we are discussing applications versus diversion. Have you remembered this thing? So for that thing, when you're discussing the concept of income, recorded videos are available. You may refer to that discussion. So if someone is waiving his salary or someone is foregoing his salary, what he is doing is applying his salary. But once salary is accrued, it becomes taxable. So therefore, if you are foregoing your salary, it is still taxable in your hand. Is it clear to you?
Yes, sir.
So waiver of salary by the employee does not absolve him from the liability to income tax. He is still liable to pay income tax on it. If he is foregoing, he is donating, that's a different thing. That means he is applying. applying his salary for different purposes, but his tax liabilities are there. Okay.
Yes, sir.
This is about foregoing salary. But the next point is slightly different from that. Here, what we are talking about, point number 4. Can you read it?
Surrender of salary.
Here, we are not talking about foregoing salary. Here, the concept is surrender of salary. But surrender of salary means what? Surrender of salary means surrender of salary to central government. Under Section 2 of the Voluntary Surrender of Salaries Exemption from Taxation Act 1961. If someone is surrendering his salary under this act, under the provisions of this act, then the salary so surrendered shall be exempt while computing his taxable income. Right? So surrendering of salary may be exempt. But foregoing of salary is taxable. Is it clear to you?
Yes, sir. Sir, can you give one example, like under what circumstances a person surrenders his or her salary to the central government?
Many times, you have seen many instances, our political leaders, some of the leaders, they surrender their salary. Some of our presidents have surrendered their salary. They take some amount, minimum amount, the remaining amount, they surrender to the central government. They don't take their salary. And this option is available to every citizen. If you want, he can surrender his salary to the central government. But under the provisions of the act, in that case, the salary so surrendered is not taxable. That is exempt from tax.
Okay, sir.
Okay, got it.
Yes, sir. Yes, sir.
Great. Let's move to the 5th concept. You might have heard the concept of tax-free salary. Some people talk about this, my salary is tax-free. Friends, try to understand there is nothing called as tax-free salary. But when someone is saying tax-free salary, what he exactly means is that employer is bearing the salary part, bearing the tax part. That means on behalf of the employee, employer is paying salary. Are you getting it?
Yes, sir.
Okay. But in that case, what will happen? You imagine if this is situation. Suppose your salary is, in this situation, actual salary needs to be grossed up. For example, let us say your salary, I am saying your salary is 6 lakh. And it is tax-free salary. That means, let us assume the tax liability is for assume, let us say 13,000. That's 13,000 is the amount of tax which is borne by your employer. Okay. That's why you are not paying any tax. Because whatever is tax is paid by the employer.
Yes,
But in
sir.
this case, what will happen? Your actual salary is not 6 lakh. Actual salary is 6 lakh 13,000. Because your obligation of 13,000, which is borne by your employer, is also your salary. So under tax law, there is nothing called tax-free salary. Rather, when employer bears it, then it has to be added with the salary computation of the employee. Are you getting?
Yes, sir.
So you need to find out what your total salary is now, 6,13,000. On that, you need to find out what is your tax liability. If it is paid by the employer, to what extent you can find it out. The remaining amount you have to pay. Are you getting?
Yes, sir.
Yes. So there is nothing called tax-free salary. Yeah, there might be some tax-free allowances. That's a different thing. But tax-free salary is not. So in these cases, yeah, you are asking something.
Sir, one doubt, sir. Sir, before this slide, the surrender of the salary, sir, it denotes a certain amount or the any amount can be surrendered.
Any amount can be surrendered. Entire salary can be surrendered. We are talking about surrender of salary, right? Any amount can be surrendered. Certain percentages can also be surrendered.
Okay, okay, sir.
If you want, some people also keep only 1 rupee and surrender the other thing. as a token receipt. Any amount can be done.
Okay, sir.
Some people surrender it 100%, some people surrender it 50%, like this. Okay. Now, friends, we are talking about tax-free salary. In these cases, as you know, the income from salary in the hands of employee will consist of his salary income and also the tax on his salary paid by the employer. So the tax amount which is paid by the employer will also be included with the employee's salary. Okay. But however, there is one more concept you have to remember. I was discussing at the beginning the concept of section 10. You know what is that? What is section 10?
There are certain exemptions given.
In fact, these are certain incomes which do not form a part of total income. They are the exempted income. If you see
Yes,
this
sir.
particular provision, section 10CC, it talks about income tax paid by employer on non-monetary purchases on behalf of employee would be exempt in the hands of employee. So first thing what I told, if employer is paying some tax, then that will be included in the employee salary. Okay? Yes or no? That means salary amount has to be grossed. But if employer optionally, as under his option, is paying tax on the non-monetary perquisites, that means certain perquisites are given. Perquisites are non-monetary. Perquisites means you are not given any money, but you are provided certain facilities. Let us say you are provided a free house as an employee or a free car. These are the perquisites or perks. Let us say employer voluntarily paying tax on those perquisites. Then in normal situation, tax should be included with the employee salary. Yes or no?
Yes, sir.
But because of this particular section, section 10CC, it will not be. What is not to be included? Perquisites will be included, but the tax paid by the employer voluntarily will not be included. Okay, I would like to show you to section 1010 so that you can have a look at that. Okay, you see income tax department side. Let me take you to section 10. You are seeing the section 10. You see the title. What is this?
Incomes not included in total income.
Incomes not included in total income. You see, I clicked here. Now you can see I was taking you to 10CC, right? So this is, you see 10 subsection 1, 2, 3, 4. I want to take you to section 1010. Now 10A. I told you 10CC. Yeah, this is 10CC. You see. In case of an employee being an individual, derived income in the nature of perquisites, not provided for by way of money payments, that is non-monetary perquisites, within the meaning of clause 2 of the section 17. The tax on such income actually paid by employer at the option of employer. That means employer optionally paying tax not on the salary, is paying tax on the non-monetary perquisites, and he's paying it on behalf of the employee. Okay, notwithstanding anything contained in section 200 of the Companies Act 1956. Now forget that thing. That means if this is there, then this will not form a part of total income. The section 10 talks about incomes which are exempt. So therefore, interpreting this particular provision, so if you see what I told you right now, that as per section 10CC, the income tax paid by employer on non-monetary perquisites on behalf of the employee would be exempt in the hands of employee. So that tax component will be exempt. Okay, it will not be grossed. Understood this concept?
Yes, sir.
Okay. Concept number 6. Place of accrual of salary. This is important, as you know. Now, earlier we had friends discussed about section 9. Many provisions of section 9 we have discussed. Right, to understand what is the meaning of earned income deemed to accrue arise in India, all these things were discussed earlier. So if you refer to section 9(1)(2), salary earned in India is deemed to accrue arise in India, even if it is paid outside. Okay, if it is earned in India, then it will deem to accrue arise in India, even if it is paid outside India. Or it is paid or payable after the contract of employment of India comes to an end. That means, let us say someone is doing a job in India. Since his employment is India, salary will be deemed to accrue arise in India. But let us say his job comes to an end. He retired. After that, he is receiving pension from London. Pension in London. Okay. He has done his job in India, but pension is received in London. So in this situation, that pension is also salary. That pension shall be deemed to accrue arise in India, even if it is received in London. So if an employee is paid pension abroad in respective services rendered in India, the same will be deemed to accrue or arise in India. Is it clear to you?
Yes, sir.
This is so even if it is paid outside India, and even if it is paid or payable after the contract of employment in India comes to an end. Similar provision. This also we had discussed earlier. That's provision of leave salary. So leave salary paid abroad in respect of leave earned in India is deemed to accrue arise in India. Let us say someone is doing his job in India, and because of his job, he has earned some leave salary, and he has gone on leave and stayed abroad. And for this leave period, he is earning his salary. That salary will also be deemed to accrue or arise in India only. Okay, even if during that period he has stayed abroad, because that leave is earned from India. Is it clear to you?
Yes, sir.
No. But one connected concept here, there you have to remember. This is about 9(1)(3). It provides that salaries payable by government to citizen of India for services rendered outside India shall deemed to accrue arise in India. This is what we have discussed earlier. Okay. What is that? Salaries payable to government. Salaries payable by government to citizen of India. That means an Indian citizen who is a government employee, but service, he's doing his service outside India. Indian citizen working, let us say, in US Embassy. Services are rendered outside India, but salary is payable by government of India, and the employee is a citizen of India. So this is the kind of situation that salary, even if it is received or earned outside India, shall be deemed to accrue or arise in India. Okay, this also we had discussed earlier. Yes or no?
Yes, sir.
But here again, one more connected topic point you have to remember. This is again section 10 clause 7. Allowances and perquisites paid or allowed outside India by government to citizen of India for rendering services outside India is fully exempt. So if an Indian citizen who is working outside India and receiving salary from government of India, then his allowances and perquisites are exempt. But salary is taxable. The salary is deemed to accrue arise in India. Okay. So you have to see who is the payer. Payer is government. And receiver should be citizen of India. And place of work should be outside India. Salary is taxable. Perquisite allowances are exempt. But if the receiver is not a citizen of India, then it's a different story. Okay, it is not coming under this process. Okay.
Yes, sir.
Okay. So section 10(7), if you like to see, let me show you. So that at the same time you can learn many provisions of section 10 also. Section 10(7), you can have a look at here. Section 10 we had already opened. Section 10cc, 10(10)cc, I was showing you. Section 10(7). Yeah, section 10 US7 you are saying. Any allowances and perquisites paid or allowed as such outside India by government to citizen of India for rendering services outside. This is exempt. That's what I told you. Right? Okay.
Yes, sir.
Okay. So section 10(10) contains incomes which not included in total income. You've said section 10(7) excludes the allowances and perquisites paid by government of India, paid by government to Indian citizens for rendering services outside India. But the salary is taxable. Okay, friends. This concept is clear to you.
Yes, sir.
Now come to the next concept. Yeah. Here, friends, try to understand. There is a difference between advance salary and salary advance. When I say advance salary, that means you are receiving your salary in advance. For example, let us say March month is going on. So you are receiving April month salary in advance. And you will be understanding the salary is taxable on due basis and receipt basis, whichever is earlier. That means every month salary, if you are receiving in the month of March, your tax is taxable now. Okay, this is called as what? Advance salary you are receiving. But friends, advance salary is different from salary advance. What is salary advance? Salary advance take the character of a loan. That means your salary is due, but against that, you are receiving some loan or receiving an advance from your employer. Okay, so you can say that is advance against your salary or salary advance. And the character of that receipt is a loan. When it is a loan, it's not taxable because it's not salary. It's not income. It's not income. Therefore, whether it is salary or not, that question doesn't arise. Is it clear to you?
Yes, sir.
So what we have understood, if salary is received in advance, we call it as advance salary. Advance salary is what? Advance salary is also salary and it is taxable. But advance against salary or salary advance is what? Is it taxable?
No, sir.
No, it's not an income. Okay. Now, friends, next concept. Just a minute. Yeah, concept number 8. Contract of service. Okay, here also two things you need to understand. What is contract of service and what is contract for service? Let us say what is contract of service. If there is a contract of service, means one is doing service and there is a contract. If this is the situation, you can say this income is a salary income because this is an employment contract employees. That is salary. But contract for service is something different. Contract for service means you are outsourcing some of the service activities. For example, a company might be having its own employees and there might be employment contract. So this contract is contract of service. And in the hands of employees, those income which is paid by the company to the employees are salary. But there is a possibility, let us say that same company has outsourced the security services. So the security guards are not the employees of the company. They're not the employees of the entity. They're outsourced. Are you getting the situation? They might be employees of a different agency, maybe a security agency, but they're not employees of this company or this entity. So if this is so, you can say there is a contract for services with that security agency. And this company or entity is paying money for that. If it is contract for services, or if the receipt is contract for services, then it is not salary. It may be business income, that is PGBP, profit and gains of business and from some, or it may be income from other sources. It depends. But if it is a contract of service, then it is what? Salaries. Are you getting?
Yes, sir.
When I say it is a contract for services, you see, the payer do not actually practically supervise the work. The payer doesn't monitor the work. The payer doesn't, you can say, direct the employees. He has a contract to do certain things. Okay, the supervision, direction, all these kind of controls are with some third party. So you can say it is contract for service. Okay, contract for service is not salary, but contract of service is salary. Okay, so these are the 8 principles we have decided. So now these principles, why you are learning, because it's relevant. On this basis, one can argue whether it is salary or not. One can argue what is the, on the basis of the character of income, whether it will constitute salary or not. Did you understand this?
Yes, sir.
Okay. Good. Now, friends, having understood this, let us move ahead now. Friends, you are aware of that for assessment year 22-23, this is the rate of tax. In our earlier sessions, we had discussed about it. So no need to repeat it. Is it not? Yes or no?
Yes, sir.
Okay. And you are also aware of that for assessment year 22-23, and also in the previous assessment year, also the same thing was there. There is also an optional rate that one may choose to pay at a different rate, which is lower. You are aware of it or not?
Yes,
This
sir.
also
Section
we had-
115.
Yes, very good, fantastic. Yeah, so these things were discussed thoroughly. I had also shown you by using tax calculators. Now, are you familiar in using tax calculators which are provided in the income tax department's website?
Yes, sir.
Yeah. So this thing we have also seen, and for which also those who have not seen, recorded videos are available in your website, so you can visit that. Now, but at that time I had told you that if you are opting for this new scheme, then you will not be eligible to get benefit of certain deductions, right? Certain exemptions, certain rebates, you will not be able to get the benefit. Here, in the meantime, I think it is pertinent to discuss that what are those benefits one will not get if he's a salaried employee. Okay, so normally you see, these are the deductions which gets affected under new scheme. You can see the standard deduction is a deduction which you normally every salaried employee get. That will not be available. Leave travel concession benefit will not be available. House rent allowance benefit. Certain allowances which will be loaning. We call it as special allowances which are there under section 1014. You see this section 10.5, 10.13a, this means these are exempted allowances, right? So these exemptions will not be available if you opt for new scheme. Okay, then Point number 5 is not connected to salary, but still it is relevant because most of the salaried employees also claim this thing. Housing loan interest up to 2 lakh, one will not be able to get under new scheme. And again, deduction under section chapter 6A up to 1,50,000. And in case someone is having NPS, then another 50,000. So this deduction one will not be able to get. Donations, if given, one gets a deduction under section 80G, that one has to sacrifice. Educational loan interest under section 80E, that one has to sacrifice. Saving back interest income under section 80TTA, one has to sacrifice that. So these are the list of the things one is going to sacrifice one if he opts for the new scheme. Okay.
Yes, sir.
Okay. Up to this, is it clear to you?
Yes, sir.
Well, friends, now again we have come up to stage. Again, we're still at the fundamental. Now, having understood this, now we are in a position to enter into the charging section. That is section 50. How salary will be charged to income. Now we are going to learn that thing. Okay. So, friends, now let me take you to section 15, which is the charging section. I had shown you at the beginning. Right now, once again, let me take you to the income tax department's website. Give me a moment. Let us see. Section 15, right?
Yes, sir.
Now you see section 15, which is salaries. Let me open it for you. So if you read it here, you say the following income shall be chargeable to income tax under the head salaries. If you read it here, it talks about any salary due from an employer or former employer to the assessee in the previous year, whether paid or not. That means whether it is paid or not doesn't matter. If the salary is due, then it will be chargeable under the head salary. Second point is salary. This point it says that any salary paid or allowed to him in the previous year by or on behalf of employer or former employer, though not due or before it becomes due to him. That means whether it is due or not doesn't matter. If it is paid, then that is also included. That means on receipt basis it will be taxable even if it is not due. That means if salary is received in advance, that is also taxable. Third point says the arrears of the salary, if allowed to him in the previous year by or on behalf of the employer or former employer, if not charged to income tax in the earlier previous year. So arrears of income tax, as you have seen, normally salary is taxable on due basis or receipt basis, whichever is earlier. If it is received, it is taxable even if it is not due. If it is due, it is taxable even if it is not received. So this areas of salary normally it should be taxable on due basis. But in case for some reason the areas of salary is not charged to tax, then it will be charged to tax when it is received or when it is due. Are you getting me? So
Yes,
areas of income tax will be chargeable to tax if it is not charged to income tax. And there are two explanations. First of all, it says for removal of doubts, it is hereby declared that where any salary paid in advance is included in the total income of the persons for the previous year, it shall not be included again in the total income of the persons when salary becomes due. Suppose advance salary someone has received. So salary is taxable on due basis. Salary is taxable on receipt basis also. So if it is already taxable on receipt basis, again, it will not be chargeable on due basis when it becomes due. Meaning there will not be any double taxes. And there is one more explanation. Any salary, bonus, commission, remuneration, by whatever name called, due or received by the partner of the firm from the firm shall not be regarded as salary for the purpose of this section. So partner's salary, bonus, commission, remuneration will not be regarded as salary. So this is what you have seen section 15. Now let me share my PPTs with you. Now, if you summarize that, what we have seen right now, we have understood that salary includes due from former employer or present. So when former employer is included, that means pension is also salary. It may be due from the present employer or former employer in the previous year, whether it is paid or not. If it becomes due, then even if it is not paid, it is taxable. Is it clear?
Yes, sir.
Now it is said paid or allowed during the previous year. Either it is paid or it is allowed to you to take that salary. Paid or allowed in the previous year by the former employer or present employer, whether due or not. That means even if salary is not due, let us say you have drawn salary in advance, you're allowed to draw advance salary. That is also taxable. Okay, that means on payment basis it is taxable. And arrears of salary paid in the previous year by former employer, present employer, if not charged to tax. Let us say employer is paying some arrears of the salary, and this arrears was not charged earlier on due basis. Then also it is chargeable to income. It is chargeable to tax as salary. Okay. So if you summarize this section 15, the three things: due from employer, employer may be present employer, former employer, or paid by employer, or arrears from employer. All these three things are taxable under the head salaries. Is it clear to you?
Yes, sir.
Okay. Now, here, few more concepts. Salary paid earlier as advance and included in the total income of the previous year will not be included again when it becomes due. For example, let us say right now, March month is going on. And let us say you have drawn April month salary. You are allowed to take April month salary here. What is this? It is advance salary. And since it is received, even if it is not due, it will become due only at the end of April. But you have received it in advance. So it is included in salary. So once it is included in the salary in this previous year, that is 21-22. It will not be again included in the previous year 22-23. Okay, so therefore I am repeating, salary does not include salary paid earlier as advance and included in the total income for any previous year. If it has already been included, it will not be included again. Are you getting my point?
Yes, sir.
Second thing. Salary, bonus, commission, remuneration received by a partner of the firm from the firm. Here we are talking about specifically partnership firms. Partnership firm, partners also draw salary. Some partnership firm, if their partnership deed allows them, partners may draw salary from the firm. Okay? If partner is drawing salary, where from partner is drawing salary? From the firm. Now tell me, is there any employer-employee relationship between firm and the partner? In fact, in the partnership firm, the partners are the owner of the firm. Yes or no?
Yes, sir.
So since they're owner of the firm, there is no employer-employee relationship in this salary transaction. So partner salary, partner's bonus, partner's commission, partner's remuneration are not salary. It will be taxable under the head profit and gains of business of profits, not under the head salary.
Okay, sir.
Is it clear to you? Now tell me,
Yes, sir.
commission received by an agent from the principal. Let us say there is a principal, that's an agent. So you know the law of agency. So, and the principal is paying some commission to the agent. Here also, if you interpret, you can analyze, you can find it out. Here also, you don't find any employer-employee relationship. Rather, it is a principal and agent relationship. This being so, the commission received by an agent from the principal is not taxable under the head salary. It may be under PGBP or income from other sources. It depends. Okay. And
Yes, sir.
it's again pertinent here to repeat this thing that advance against salary is not taxable because it is a loan. Salary advance is taxable. Okay, but advance against salary is not taxable. When we say advance against salary means what I'm talking about? Salary advance. So salary advance is not taxable. But advance salary is taxable.
Yes, sir.
Okay, got it? Advance salary means I mean salary received in advance.
Yes, sir.
Okay, and salary advance mean what I mean is that advance against salary. If it is advance against salary, it is not taxable, it's a loan. These concepts we have discussed that.
Yes, sir.
Now here we can conclude that salary is taxable on a cash basis. That means if it is received, whether due or not, doesn't matter, it is taxable. So salary is taxable on cash basis or receipt basis, whichever is earlier. Okay. Now, friends, you need to understand this thing that salary accrues as one renders service. Let us say today, my first day of joining, one day I perform. Then my 1 day salary accrues. But when it will become due at the month end, it depends upon my terms of employment when it will become due. It may become due on the last day of the month. It may become due on the first day of the next month. It may also become due maybe 7th day of the next month. It depends. Due is a different thing, but accrual is a different. So as a person renders service, salary accrues. When it will become due, it depends on the terms of employment. Normally, it becomes due at the end of the specified period as per terms of contract. Okay, I think you have understood accrue due. And as I had told you, or we have been discussing here, employer-employee relationship is a must. Payment must be in the capacity of employer. Employer must be paying it in the capacity of an employer. Agent-principal relationship is not same as employer-employee relationship. Therefore, commission received by agent from principal is not salary. Contract of services is salary. Here, the payer is empowered to supervise and control the pay. Whereas contract for services, not salary, because payer is not empowered to supervise and control the pay. Now, with this background, or up to this, we have covered. So we have understood this is in fact, this is the essence of section 15. You can say section 15 is over. Charging section is over. So on the salary chapter, there are 3 sections. Charging section is over. Next is section 16. So I had shown you what is section 16. Section 16 is about what? Anybody has remembered? Section 16.
Yes, sir. Sir, section
So
16.
deduction.
It's about deductions. Friends, we'll come to this section 16 towards the last part of our discussion. So now let me skip section 16. Section 16, anyway, you already know there are 3 deductions are there. One is standard deduction. Second is your entertainment allowance. And the third one is tax on employment or professional tax. That will be coming to the last part of our salary chapter. These 3 deductions. But now from 15, let me straightway jump to section 17 because section 17 discusses 3 concepts or 3 meaning of 3 terms. One is what? Salary. What is salary? We'll be learning. That is important for us. What is salary? You need to understand. Then what is percolate and what is profit in lieu of salary. So let me take you to section 17. Section 17, anyway, I had already shown you. Now, this is what we are going to discuss. Section 17.1, 17.2, and 17.3. Okay. Now, if you read section 17.1, let me, if you go through that, you will find the salaries. Okay, let me show you first section 17 once again. Then I'll be showing you the slides. So at this stage, I expect all of you need to familiarize yourself with the Bear Act. So always keep on referring to the Bear Act. This habit is important for you. I want to understand the meaning of salary. So you know which section I am going now?
17.
Just 17. Okay, just give me 1 second. Yeah. Just 1 second. It seems a little slow. Okay. Section 17, I think you're able to see now. You can click here. Now you see section 17.1. I want you to start reading. We may not read it, all these items, but please start reading. What is 17.1? Will you please read it?
Yes, sir. Salary includes
Okay, now wait.
wages.
Now first you tell me what kind of definition it is. It's an inclusive definition, exhaustive definition.
So inclusive.
Inclusive definition. Okay, that's good. That is what I wanted to highlight here. That you see, it is only inclusive definition. That means it is not that salary means 1, 2, 3, 4, 5, 6, 7, 8. Rather, since it is inclusive, salary includes 1, 2, 3, 4, 5, 6, 7, 8. But in addition to that, there might be many more things. Okay, now just have a look at here: wages, annuity, pension, gratuity, etc. So all these things, okay, contribution made by central government, all these things. If I summarize that thing, you can see the slides now. So all these 8 items, in fact, I have broken into various items. So totally around 17 items are covered here. But what is important here, salary includes. Okay, so advance salary is also salary, wages are also salary, fees, commissions, pension, annuity, perquisites, profit in lieu of, what is that? We'll be learning that. Profit in lieu of salary is also salary, right? Gratuity is also salary, annual bonus, income from provident fund, leave encashment, allowances, awards, annual accretion to recognized provident fund to the extent it is taxable, transfer balance of recognized provident fund, contribution by central government or other employer to the account of employer under pension scheme referred in section 80 CCD. All are included in salary. Okay, just have a look. You can have an idea that how broad the term salary is. Moreover, it is an inclusive definition. Okay, so what I'm showing you is in fact the summary of section 17.1. Okay.
Yes, sir.
Right. Now, here, connected to that concept, connected to the definition, few more concepts also we need to discuss right now. First, let's try to understand that it's not necessary that salary has to be received in cash, bank, etc. It's not necessary. Salary may be received in kind also. Okay, salary may be paid in kind. Second thing is that if salary is received from more than one source, it needs to be accumulated and it is taxable under salary. So if someone is receiving salary from multiple employers, then that has to be clubbed together. But it should be real salary. It should not be a fictitious salary. That is, without employment, you are receiving something. Then it is not salary. It will be taxable under some other head. Okay. So it should not be a dummy employment. So tax-free concepts I had already told you. There is nothing called as a tax-free salary. Tax shall be deemed to be income under the head salary. But if the tax is payable on the perquisites, voluntarily which is payable by the employer, so that may be excluded. That is not taxable. That is not taxable means that tax part is not taxable. Taxes paid by employer on behalf of employee on non-monetary perquisites will not be taxable in the hands of employees. That also we have discussed. Salary forgone concept we have discussed, and salary surrender, that concept also we have discussed. Now, having understood this, now this is time to understand or to discuss the provisions, various provisions which are relevant for salary. So, you know, various salary includes various items. The first item that we'll be covering is gratuity. Okay. Have you heard of what is gratuity? Normally, people receive it at the
Yes,
time
sir.
of retirement. Sometimes they are also receiving it before retirement. Also, some people get gratuity. So, this is gratuity is a part of salary. Gratuity receipt means it is again there is employer-employee relationship. Is received from the employer by the employee, so it is salary. So, once you're saying gratuity is a salary, so let us see the taxability part of this gratuity. Today, let us complete that thing. Now you have a look at this. Now, if you look at here, the gratuity, some part of the gratuity is exempt. And you know, exemptions are dealt in section 10. Now, what is relevant here is the section 10.10. So you can refer to the where also. You can read the what are the items are exempted in section 10.10. Okay. And even if under salary, we are learning only 3 sections, but connected sections like this gratuity, we have to also study. So this gratuity, as you can see in the chart, can be received in 3 situations. First one is on continuation of services. That means person is on the job, is continuing his job, and he is receiving gratuity. Okay. Second is on termination. On termination means person is retiring. At the time of retirement, when his job is getting terminated, he is receiving this gratuity. Okay. Third situation is gratuity received after death. That the employee is dead and the gratuity is received by his legal heir. That is the third situation. These are the only 3 possibilities. Yes or no?
Yes, sir.
Now, let us analyze how to deal with this. First, try to understand when the gratuity is received during continuation of the service, it is fully taxable. That means you don't have to do anything. You know, just salary, just like basic salary is taxable. Salary are this gratuity because it is fully taxable, no exemption thing. In which situation? When employee is on continuation of service, employee's job is not permanent. Is it clear to you? Suppose employer is having 5 years service, but he has withdrawn gratuity. What will happen? It is fully taxable. It will be just added to the salary. Is it clear?
Yes, sir.
Now, let us come to this side, extreme right side. What is here after death? Here you have to remember, if gratuity is received after death, then what is the treatment?
Fully exempted in the
Fully
section.
exempt. So on continuation of service, it is fully taxable, and after death, it is fully exempt. So no issue here. You can easily remember. Okay.
Yes, sir. Yes, sir.
Now, but what will happen when gratuity is received on termination of services? That means at the time when service is terminated, or the person is retiring when he is receiving gratuity. Now you have to see. Here, friends, in this case, we have to classify them into 2 categories. One is non-government employees, second is government employees. Friends, here we are talking about gratuity at the time of retirement. If you look at this picture, you can see government employees, what is the treatment?
Fully exempted.
So government employees fully exempt. So that is also what this also you can remember. Now only problem arises if the person is a non-government employee. Here we have to apply your point. So I summarize these things. At this stage, we have understood gratuity during continuation of service is fully taxable. After death, it is fully exempt. And if gratuity received at the time of termination, government employees, it is also fully exempt. But non-government employees, again, we have to classify into two categories. We have to see whether they are covered under Gratuity Act or they are not covered under Gratuity Act. If they are covered under Gratuity Act, then we have to treat it under section 10(10)(2). And there are three limits. Lowest of that thing will be exempt. And if they're not covered under Gratuity Act, then treatment has to be made under section 10(10)(3). Another three limits are there. Lowest of that thing will be exempt. Okay. Now just have a look, try to understand. Got the concept now? How gratuity will be taxable. Now, what I showed you right now in this picture, let me explain you that. Now you see, gratuity received during continuation of service, whether by government or non-government employees, are fully taxable. If it is received after death, then also whether it is government or non-government employees, it is fully tax-free, fully tax-free. And when it is received on termination of service by government employees, it is fully exempt under section 10(10)(1). Non-government employees covered under Gratuity Act, they are also exempt, lowest of three limits covered under section 10(10)(2). But if they are not covered under Gratuity Act, then there are three limits, lowest is exempted, 10(10)(3). Okay, so last two things we are going to learn now. But few related concepts. When I say government employees, and here government includes employees of central government, state government, or local authority, but not employees of statutory corporations. Statutory corporation employees are not government employees. And gratuity received as a director of an insurance agent shall be taxable under income from other sources. Okay, so gratuity received by a director or an insurance agent. Both the cases, there is no employer-employee relationship. It will be taxable under that income from other sources, not under itself. If this third point is about a specific case, a managing director retired and reappointed. He got retired and immediately got reappointed. In that case, gratuity here shall be treated as received in continuation of service. Here you cannot say it is received at termination. No, it will be received as it was treated as on continuation of service. Consequently, it is fully taxable. Understood the third situation? Third situation, one may very smartly do a tax planning, or you can say it's a incorrect tax planning. So, what a person can do, he may be terminated, immediately got reappointed. In that case, this type of tax planning will fail because it will be treated as if that person is in continuation of service. And if it is gratuity received in continuation of service, it is fully taxable, no exemption. Got it, friends, these three concepts?
Yes, sir.
Now, first thing we'll see, non-government employees who are covered under Gratuity Act. How much is exempt? I have told you three limits. Now, three limits you can remember. Minimum of the following. What is the first one? Actual gratuity receipt. Second one is how much?
Statutory amount 20 lakhs.
20 lakh is a fixed amount. And the third point,
15 days
15 days
salary.
salary for each completed year of service or a part thereof exceeding 6 months, computed at 26 days per month basis. Here you have to understand. Third limit is 15 days salary for each completed year of service. Let us say someone has completed 20 years of service. So for each year, 15 days. That means for each year, half months. So 20 years means how many months? That means 10 months salary. Are you getting it? 15 days salary for each completed year of service. Did you understand the meaning of this?
Yes, sir.
Okay. But or a part thereof exceeding 6 months. Suppose someone has completed 20 years and 7 months. The 7th month is a part of the year which is exceeding 6 months. So that means this will be also treated as 1 year. That means here it will be treated 20 years plus 7 months means it will be treated as 21 years. So 15 days salary for each completed year of service. So for 21 years, 15 days salary. That is 15 days into 21. It will come to 10 months and 15 days salary. Are you getting it? Understood the third point?
Yes, sir.
And one more thing. And this has to be computed on 26 days per month basis. You need 15 days, sir. How will be computing this 15 days salary? It will be taken that your last drawn salary is for 26 days. Suppose in a month you are supposed to work for 26 days. 4 days are holidays. Sundays. So last month's salary divided by 26 into 15. You got 15 days salary. Yes or no?
Yes, sir.
And here salary means basic salary plus DA. And salary also means last drawn salary. Friends, here we are talking about the situation for government employees who are covered under gratuity and they are receiving gratuity at the time of termination of their employment. Okay, so these 3 limits I told you. First one is actual gratuity. Second is statutory limit of 20 lakh. Third one is 15 days salary for each completed year of service or a part thereof exceeding 6 months computed on 26 days per month basis. So these 3 limits you have to compute. And the minimum of this thing, whichever is lower, that gratuity will be exempted. And the remaining part of the gratuity will be taxable. Did you understand?
Yes, sir.
Friends, let me share an example with you. All of you, please try to participate and answer me. Yeah, are you able to see this question?
Yes, sir.
Suppose a person is working for a particular company which is covered under Payment of Gratuity Act. And gratuity received on termination. How much? How much?
5 lakhs.
5 lakh. And the service completion period is 20 years and 6 months. And his last run salary structure is basic salary 12,000 plus DA 50% plus HRA 10% plus city compensatory allowance 5%. Compute the taxable amount of gratuity. It is open to you. I'm giving you, let us say, 2-3 minutes. Please try to complete it. Yes, friends. Now I am showing you the answer. I think most of you have done it. So first limit is, as you know, what is the first limit? Actual gratuity received is given in the question 5 lakh rupees. Second thing is the statutory amount 20 lakh rupees. Now the problem here is the third limit, how to calculate. Third limit is 15 days salary for each completed year of service. How many year of service is completed here?
20 years and 6 months, which is to be considered as 21 years.
21. So your opinion is 21 years. So my dear law students, try to understand. Again, interpret the law, what it says. 15 days as salary for each completed year of service, or what? Should I show you? Or a part thereof exceeding 6 months. Is it not? That's what I told you. Yes, sir. Whether this 6 months is exceeding 6 months.
No, sir.
Then 20 years is how many years? Whether this 6 months.
10 months.
Yeah, so 20 years means 20 years, not 21 years. Okay, and it means 6 months and 1 day, then your interpretation is right. Because a part of the year which is exceeding 6 months, it is not exceeding 6 months. So for each year, 15 days, and for 20 years. So you are saying it is 10 months, that means 15 days is half a month. On that basis, you are saying. Okay, so this is the catch in the question. So you have to be very careful about this thing. So on that basis, you will say 15 days salary for 20 years. And which salary? Basic plus DA. Okay, and you have to calculate basic plus DA is how much? How much you will calculate? What is basic salary?
12,000.
12,000 plus BA
50%, I guess.
50%.
6,000. Yeah.
6,000. So and 12,000 plus 6,000. Then this 12,000, 6,000 is for 26 days. So divided by 26 into 15 and for 20 years. Okay. So the amount comes to this much. 2,07,692. Yes or no?
Yes, sir.
Okay. If you want to know how salary is calculated, I'm showing you detail. Salary for gratuity is 12,000 plus 50% of 12,000, it is 18,000. So here what I'm doing, 18,000 divided by 26 into 15 into 20 years, not 21 years. These are the three limits. What is exempt is minimum of this. Yes.
Sir,
Yes.
I have done in the same method, but sir, I have taken 20,000 instead of 18,000. Sir, can you just repeat the step how it came 18,000?
How it came 18,000?
Yes, sir.
What the question says, 12,000 rupees is the basic salary. And
Yes, sir.
50% of it is the DA.
Yes, sir.
So 12,000 plus 50% of 12,000 is 6,000. So 12,000 plus 6,000 is 18,000.
Oh, sir, 50%. Okay.
50%. So you see the question. Question is before you. What is the question? 12,000 plus DA 50%. Are you able to see it?
Okay, sir.
Okay, right. Got it. Here the main catch in this question is that the 6 months should not be interpreted as 1 more year. Got it?
Yes, sir.
So
Yes.
out of which what is tax free is the minimum of these three. These three limits are 5 lakh, 20 lakh, and 2,07,692. Therefore, what is exempt? What is tax free is 2,07,692. And how much is taxable? Total received is 5 lakh rupees. Exempted is 2,07,692. Taxable is 2,92,000 P not. Are you getting?
Yes, sir.
Understood this?
Yes, sir.
Okay. Few more concepts you have to remember here. If it is a employees are seasonal, working in the seasonal establishment, then we have to take 7 working days for each completed year of service. So the third limits will be computed like this: 7 by 26 into completed year of service into salary per month. Okay, so 7 days working days for each completed year of service for seasonal establishments. Okay. Now, piece rated employees. There are some employees which are not receiving fixed salary. They work on piece rate basis. So 15 days salary shall be computed on the basis of the total wages of the period of 3 months immediately preceding the termination of employment. Okay. So we have to see in the preceding 3 months how much salary they have drawn. We can average it out. We can find out that is the monthly salary, meaning that is the 26 days salary. Is it clear to you?
Yes, sir.
Okay. Now, next is about, this is about section 10.10.3. Okay, section 40, section 10.10.3, you can also visit to the Income Tax Department website and refer the Bear Act. Here it is about non-government employees who are not covered under gratuity. Here you see, again, what is exempted is minimum of the following. What are the following things? One is actual gratuity receipt. It's the same in the earlier, is it not? And second limit is how much?
Statutory amount of 20 lakhs.
20 lakhs. This was also there earlier.
Yes, sir.
Yes, sir. But third limit you can find there is a change. Third limit, what was there in case of people who were covered under gratuity act, it was 15 days salary for each completed year of service or a part thereof exceeding 6 months, and which has to be completed on 26 days per month basis. But here you're seeing the language. Third is something different. What is written here? Instead of 15 days,
Half month service salary.
half months average salary. There, what 15 days salary. So 15 days and half months are there are different things, different lies in interpretation. When I say 15 days salary, law is specifying that you have to compute 15 days salary. Therefore, I divided it into 26 and multiplied with 15. But when the law is a half month salary, I will not going to find it on this thing on that basis. Half month salary means salary divided by 2. Are you getting?
Yes, sir.
Half month salary is different, 15 days salary is different. And there was just 15 days salary. So I took last run salary. But here's what it is saying, not salary. 15 days, sorry, half months average salary. Okay. So how to calculate this average salary? Average salary means last 10 months average salary immediately preceding the month of retirement. Average of last 10 months. And here it is clear that for each completed year of service, that means the part thereof exceeding 6 months is not here. Are you getting? That means if someone has completed, let us say 20 years and 11 months, so how many years I will be taking if he's not covered under gratuity act? 20 years and 11 months.
20 years.
20 years. Because completed years is 20. So here, friends, you have to remember the fraction of year is to be ignored. So average salary means last 10 months average salary immediately preceding the month of retirement. And here salary means basic plus DA if it forms a part of retirement. If it is not forming a part of retirement, that means when you are, it is not paid at retirement, it is not used for calculation of retirement benefits, then it is not form a part of retirement, then that will not be included. So DA will be included only when it forms a part of retirement. The commission, if it is fixed as a percentage of turnover, then it will be included. So here salary means basic salary plus DA plus DA if forms a part of retirement, and commission which is fixed as a percentage of turnover. That is the meaning of salary here. Did you understand this?
Yes, sir.
Friends, I'm sharing a question with you. Please try to solve it. So in fact, I'm showing you 3 situations now. Just give me a moment. Yeah. Are you able to see the question now? So 3 situations
Yes,
I'm giving you. Gratuity received. First case 9 lakh, second case 2,50,000, third case 12 lakh rupees. So last 12 months salary is given to you. So 21,000, 20,000, 20,000, 18,000. So you can understand now it is for last month to first month in this order is there. Last 2 months gross salary is there. But question says the year of service is 20 years and 7 months. And salary includes 1,000 per month, DA of 1,000 per month, which does not form a part of retirement benefit. Compute taxable gratuity, assuming the employee is not covered under gratuity. When it is not covered under gratuity, then 30 years and 7 months means how many years? Is it 30 years or 31 years?
30 years.
30 years. Now focus here. Let me help you in calculation. It says salary includes 1,000 rupees per month, which does not form a part of retirement benefit. If it does not form a part of retirement benefit, that should be included in salary or not?
No, sir.
No.
Not included.
So 1,000 rupees, in fact, I have to exclude for every month. So 1,000 rupees has to be excluded. And my net salary will be this month. Okay.
Yes, sir.
Now you see, I can show you the solution directly. So in these 3 situations, actual gratuity receipt is given to you 9 lakh, 2 lakh, 3,000 and 12 lakh rupees. Statutory limit is 20 lakh rupees is common in all situations. Then it is important for a half month salary. Okay, half month salary for 30 years. The 7 months with extra will be ignored. How it is to be computed? First, we need to calculate salary. Anyway, we have calculated. Right. Average 10 months salary first we need to calculate. Is it done? Half month salary means average salary. Average
Yes,
salary
sir.
we can find out average of these 10 months. Let us say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So if you find it out, this is the average. This is how average is calculated. Okay, this average is calculated. Okay.
Yes, sir.
You can check the formula. So this amount's average is calculated here. This many cells, 10 months average. Okay.
Yes, sir.
Okay. So average you have calculated. Then half month salary for 30 years.
Yes, sir.
Okay. So that is how it is calculated like this. So average salary divided by 2 into 30 years. So 18,300 divided by 2 into 30 years. You see the formula. It is calculated like this. Okay. You can find it out. So this is the third limit. So what is exempt is the lowest of these things. This is limit 1, limit 2, limit. So first case, what is exempted is 2,74,000. Second case, what is exempted is 2,50,000. Third case, what is exempted is 2,74,500. So what is taxable amount? Gratuity receipt minus this exemption. First case, it is exempted, but taxable is 6,25,000. Second case, nothing is taxable. Third case, what is taxable is 9,25,500. Did you understand this?
Yes, sir.
Okay. So this is how gratuity is to be calculated. Hope you have understood this.
Yes, sir.
Now, friends, this was an important provision. So if I summarize the provisions of gratuity, what I told you now, in fact, I was telling you those provisions of section 10, 10.1, 10.2, 10.3. So if this is the summary, if gratuity received during service, it is fully taxable. Received after death, it is exempt. And government employees, it is exempt even if it is received during termination of service. Okay. And we have seen 3 limits are there for gratuity for people who are covered under Payment of Gratuity Act 1972. And if they're not covered under Payment of Gratuity Act, then also 3 limits are there, but these limits are different. First limit is actual gratuity received, second limit is 20 lakh, but third limit, there are changes. If they're covered under Payment of Gratuity Act, then 15 days salary we have to take on the basis of last month's salary, and DA is to be included. And if it is not covered under Payment of Gratuity Act, then not 15 months, 15 days. Only half month salary is to be calculated on the basis of average of last 10 months salary. And part of the year of service is to be also ignored. So this was the provisions relating to taxability of payment of gratuity. Is it clear to you?
Yes, sir.
Thank you very much. So we'll stop here today. Thanks a lot.